Hello, hello. How you doing, everybody? Warm hello, and thank you so much for being here. We're going to do another episode of the Trading Quotes playlist. This is my third book, published in 2022. Trading Quotes, a daily dose of trading wisdom. It's one quote every day, 7 days a week, 52 weeks, and then I take my favorite quotes out of every 3 months, and I have a section on that. You can find me on Twitter, of course, at Big Cheds. Find me in Bitcoin Live, where I am a founding analyst with my team. Love my team. And here we are on YouTube, which is where this playlist is, Trading Quotes playlist. I publish 4 books, and I make them free, so you can get them. They're on Amazon, of course, if you want to go buy them. Thank you. There's also the versions here in the encyclopedia, the Trading Wisdom playlist, and of course, my Battles with Cancer, my first book, my cancer memoir. So today, we're going to continue with Trading Quotes. And where are we at? I'm doing the entire book, the whole thing for free. Weeks 31, 32. We're going to do 33 and 34. Let's go ahead and pull that up. So, weeks 33 and 34, this will be fun. I hope you folks are enjoying this playlist. I love all your feedback. I read all of it. So thank you so much. Let's get right into it. Week 33, Monday. Taking a small loss is like eating your vegetables. You may not like the taste, but it will make your bankroll healthier. It's a great analogy because you don't always want to take the loss. I mean, most of the time you don't want to take a small loss because what if it turns around? If I take this small loss, I have to put in my trading log, that I lost a trade. There's another negative there. I was on a good streak. Now I've lost a trade. But the problem is, if you don't take that small loss, there's a pretty good chance it's going to turn into a big loss. And that's what you need to avoid. That is one of the most important things to do, just to survive and to thrive and to last as a trader. So the analogy of vegetables, especially as a kid, now that I'm older, I'm an unk, I actually like vegetables, which is funny. But when I was a kid, I didn't want to eat vegetables. I wanted pizza. I wanted chicken nuggets. I wanted these other things. But the same thing, you take the small loss. You may not like the taste, but it's going to make your bankroll healthier the same way eating vegetables will. So that's the analogy. The idea that you need to do the things that you may not like to do or like the way it feels immediately, but it is for your benefit in the long run. Okay? I really like this one. This one's fun. Tuesday, the market is not wrong. You are. I mean, I can't tell you how many times I've been in a situation where I've just been convinced that something was going to happen. I've been sure of it. I've been as sure as you can get. And then it doesn't work out. And what do? I can say, well, the market is still wrong. I'm going to hold on to my trade. The problem is, again, that small loss will turn into a big loss. Trends tend to continue. And these negative trades, they can just snowball against you. There's a lot of time. And this is also maybe a jab, you might say, at fundamental analysis. Because the idea with that, the way I would describe it is that, this is what the price should be. It's worth this. It should be worth this. It's undervalued. When in reality, the market's already decided the value. It's whatever you can buy it and sell it for in that moment. So the market's not wrong. You are. We have to accept that the market is smarter than us. The market is the summation of all information, all known, all public information. And so if it goes against you, just the market's not wrong. You are. Okay? Wednesday, start using a trading journal. Write down your winning trades, your losing trades, and even the ones you don't take. This one's interesting here. We'll talk about that. Over time, you will learn something as you analyze your trading behaviors and you spot bad habits. Keep yourself honest because no one else is going to. There's really so much to unpack in this trade. As you may know, I published a 4th book, Trading Journal, and I'm making it free on my YouTube channel. It talks about why you need to use a trading journal, how to fill one out. And, the trades you don't take, well, it's an example. You can paper trade that. If you didn't take the trade, write down, okay, what would have happened had you taken the trade? And had you employed your profit taking method or your stop loss methods, you can still practice. You can still, game theory it out, and you can learn something from that. And the trades, and even more so, the trades you actually take. And while you're doing that, analyze your trading behaviors. Learn to be more mindful. Learn to step back and observe your behavior a little bit and say, wait a minute, am I doing this action because I'm feeling this way? And, this is really critical. Using the trading journal will force you to stop, to slow down, and kind of think about the way you're going about and operating, right? Because it's really easy to just get into a mode. It's really easy to just get into a situation where you're just acting mindlessly and you're running through a loop, a predetermined loop of behavior. So this trading journal is critical. No one else can keep you honest. It has to be you. You are your own boss as a trader. You must keep yourself honest because nobody else can do it, okay? Thursday, stop hate watching positions you have already sold and move on with your life. I've done it again. All of these are from my experience, but you've taken a trade and it has gone poorly. And you've taken a big loss. And especially after a big loss, you sell and then you keep watching it. You're just tormenting yourself. I found that one of the best things to do is actually delete a ticker from the watch list after a big loss. So I can move on. I stop thinking about it. I don't have to worry, what if, what this. I'm no longer tied to every tick, up or down. You have to move on with your life. There's going to be another trade. There's going to be another opportunity. And if you're still stuck on that last one, you're not going to be able to find, that future opportunity. So it's really important once you've already sold to just move on and stop hate watching that position, right? Friday, I would rather be late to the party than show up at the wrong one. This is one of my favorite quotes. And some people say, oh, it's, I would hate to miss this one. I'd hate to miss that one. I'd rather miss it. I'd rather miss it than get in at the wrong time and be in a difficult position. And, the idea of missing is also an illusion because any good trade will have several legs to it. Move, consolidate, continue. Move, consolidate, continue. And a genuine turnaround, most of the time, will be slow to form. You'll have multiple opportunities to get in. You'll see the trend line break and then a lower high break, a 2-level filter. A double bottom will form. Okay, fine. Break out of the double bottom. Then you can play it. But messing in or trying to get in early will get you into a lot of trouble. And this is one you'll learn through experience that it's better to catch the meat. It's better to catch the meat of the move, the large majority of the move, than to try to nail the bottom. Nailing the bottom is a fool's errand. And I'd rather be late than end up in the wrong trade, and fighting the trend. So you got to be really careful. Just wait for the trend to turn around and then ride it. Okay? Saturday, full-time traders, they have specific goals of how much they need to make each week in order to pay their bills. These disciplined traders know that they cannot afford big mistakes. So they stick to trading rules designed to keep them out of trouble. And back to what I said earlier, no one's going to keep you honest. Well, if you're trading and you are a disciplined trader, you're a full-time trader, you have to have these risk management tools, these risk management methodologies in play. If this happens, I'll take a break. If this happens, I'll take profit. If this happens, I'll take a loss. This is how I slow myself down. This is how I journal. You have to be a methodical trader. You have to be a methodological trader in order to survive, okay? And because these big mistakes will absolutely take you out of the game. These big mistakes will get you into trouble. And so as a professional trader, a full-time trader, you have to survive. You have to continue and you have to avoid those big pitfalls. So stick to your trading rules. And remember why. Remember why you have the rules and why you need to stick to them. Because, you need to pay your bills. And you know that you're doing it for a reason and you cannot afford to make big mistakes. So stick to your rules. Sunday, having 10 or 15 plays at once It does not mean you're going to make 10 or 15 times the money. More than likely, you are going to lose focus, screw it up, and make nothing. There's a tendency, and again, I've fallen victim to this, and maybe I still do from time to time. There's a tendency to think, oh, let me just add this play. I've got 4, 5, 6 plays going. Let me just add a couple more. But every time you add another play, right? I'd rather add to an existing play. I'd rather add to an existing position, right? Because 10 or 15 plays, I mean, how do you manage all those positions, right? Volatility hits. You're not going to be able to manage them properly. You're not going to be able to respond properly. It's just too much. You need to know you only have a certain amount of muscle memory, right? You have only a certain amount of focus ability that you can apply at any given time. And so really you should try to have fewer plays that you play better, that you're focused on, that you understand the charts, you understand the setups, and you're able to manage your risk. It's very easy to get carried away. If you find that you're sitting there with 10 or 15 trades open, I mean, most of the time you're probably losing. You're probably losing as a trader if you have this many trades up because you're just throwing stuff out there and you're not even managing it. You're just opening trades, without ever closing them, without ever managing them. And then they own you. Then you lose your money and you give up and you say, I can't do this. But in reality, you can. If you approach this properly, disciplined, fewer trades, charts you studied and okay? That was week 33. All right, we're doing the Trading Quotes, my third book, and we're now on my third book. Now we're on week 34. Week 34, Monday. Protect your capital. Become allergic to holding losing trades. The biggest losers, these massive, devastating losses, they were all once small losses, screaming to be cut, telling you, get out. The breakout failed. The throwback failed. The pullback failed. The head and shoulders invalidated. Whatever it is that the play was, it didn't work out. And they were screaming to be cut. And you need to be allergic to holding losing trades. You find yourself just unwilling. You create this aversion to when you have a losing trade. I'm not going to hold on to this. I'm going to eliminate it. I'm going to take this small loss and I'm going to regain control. I'm going to regain my trading capital and I'm not going to let it own me. So protect your capital and just be allergic to holding those losing trades. Don't be stubborn. Take the loss. Tuesday, at the bottom of the rally, long the strong plays. And at the top of the rally, short the weak ones. This is a well-established dance, folks. This is the idea of trading with the trend and the idea conceptually that if you want to long something, if you're looking to open up a new long trade, you're looking to take a dip in an uptrend. If you're looking to short something, you're looking to take a rip in a downtrend, a move against that trend, number one. Short the weak ones. A lot of the time, much of the time when the whole market moves generally in a similar direction, let's say, for example, Bitcoin bounces, and then you've got a bunch of altcoins that also bounce because Bitcoin's bouncing is moving the whole market. You can look at the weaker coins that bounced, that had kind of mercy bounces, and these are bounces in downtrends, and they're bouncing into resistance. You can take that short. So at the top of the rally, right, a counter trend move, take advantage of a downtrend that just bounced. And when the whole market flushes, think about what was strongest before that, and you long those stronger plays at the bottom of the rally, okay? This is a well-established dance. Wednesday, a great way to keep from over trading is to force yourself to have a certain amount of cash on hand at all times. And that way you can take advantage of opportunities when they come along. So let's say your trading account is $5,000. You should always keep at least $1,500 or $1,000 or some percentage of that in cash. Because if you get into a situation where as soon as you sell, one tranche, you feel like, oh, I need to immediately put this cash into play. No, you're trading because there's cash in your account. In reality, you should be trading because there's opportunity in the market, because you've seen something, and you can't operate with dry powder. You cannot operate with no funds. You have to hold a certain amount of money so you can really then take advantage of when the real opportunities come along. So it's just a way to remind yourself, I don't need to always be in a trade, and I don't need to always have my entire portfolio at risk, because you're probably just boredom trading. You're probably thrill seeking, type of trading. So figure out some percentage, some amount, 10, 15, 20%, 25%, whatever makes sense, to always have that amount of dry powder ready for just a crazy move or some really, really good opportunity, right? Be more selective. I mean, it's the bottom line. Be more selective, okay? Thursday, every trading move you make should be with conviction. If you're not sure, then sit it out. It's the idea that a good opportunity, it will jump up and hit you in the face. It will be so clear, it will be so real that you really have no choice but to take it. Take that trade. And if you enter a trade and you don't have conviction, you're not going to be able to manage your stop loss. You won't be able to properly take profit if it works out. You're just going to be unsure the whole time, and you've got to have respect for your money. You must be sure. You must move with conviction, and this is mindfulness, right? And this is, what I talk about in the trading journal and in all these quotes, stepping back and observing your behavior. It has to be conviction. You have to understand why you're trading it and have the confidence to manage the position if things go wrong. So if you don't have that conviction, just sit it out. That's okay. You don't have to take every trade. Remember that. Friday, your capitulation is someone else's entry. The only difference is they were patient and you were not. What does that mean? Well, what happened was you bought too early, right? And you bought before the price was testing major support. The price was in a free fall, and you just bought some because you like it, or you just bought some because it should bounce here, just because, and then there's no real reason. It's just, it's due, whatever that means, right? Oh, it's due for a bounce. Most of the time, that doesn't mean anything, RSI can go from 30 down to 5. And what happens with the price when it does that, right? It's just going to drop fast, okay? So your capitulation, what's going to happen is you enter too early, you're going to give up, and then you're going to sell at the nut bottom. And then when someone else who has waited for an absolute, bottom of the channel price test, that's when they start to ladder in. That's when they start to scale in to their position. So you're capitulating. Now they're starting because they're patient and they waited. And that's the only difference. You were impatient, you bought too early, and your capitulation will be a more patient trader's entry, right? You treat your money right, or it's going to find a new owner, and that's what happens in this situation. Saturday, one of the biggest mistakes that new traders make is guessing when new charts will reverse and jumping in before that happens. Instead, they should just find an uptrend and wait for it to dip. So this is like the last one, where the new trader jumped in too early and then they capitulated at the bottom. And remember, find an uptrend and wait for it to dip, right? The idea that, if I buy this really bad chart and I nail the bottom, I'll make a great profit. But the problem is that bad charts likely going to continue to be bad and go lower. Find a really strong chart and then wait for a big dip. Wait for a dip to the weekly MA50. Wait for a dip to the lower Bollinger Band on the daily or the weekly or something. Wait for there's a dip, a move against the trend. You take advantage of that because the price will most of the time rejoin the trend and you can ride the trend. So why fight it, right? Don't jump in before the bottom happens. Wait for a 2-level filter breakout if you're trying to play a reversal. And otherwise, if you want to go long, just wait for an uptrend to dip. It's really that simple, okay? Sunday, when we are emotionally involved, we lose perspective and we make mistakes that we would not otherwise make. After taking some time to decompress, you will be in a better position to re-enter the fight with your wits about you. Take a walk and shed that emotional baggage. There's a lot to unpack here. So the trading journal, any journal, will teach you to be mindful. How am I feeling when I'm entering this trade? If you have a really tough loss, I always recommend people take a break, step away, close out your account if you need to, and then go read a textbook. Take a few weeks off and add some skills. You have to do something to let the emotion subside, right? The thing about emotion is you have to spend energy to hold on to that emotion, okay? And if you just wait, over time, the emotion will go away. When you sleep, there's a process of dreaming where the REM sleep will help remove the emotion. There's all these things that over time your body does. As creatures, there's ways for us to process these things. You have to let your body process. You have to let your mind, your soul process these things. Take some time to decompress. You need your wits. You need to have your wits about you. That means you need to kind of be ready and not let your guard down. Because when you're trading money, you have to protect that capital. You have to be managing it. And enter the fight. It is a fight. You can't come into a fight with your hands down, right? They're just going to punch you right in the face. You got to have your hands up. You got to have your wits about you. Take a walk, and maybe not more than a walk. Take a break and shed that emotional baggage, okay? This is weeks 33 and 34, and this is for Trading Quotes. This is my third book. You can catch it on Amazon. You see the poster behind me. I love this book. It's one quote every day, but you can get the whole thing for free. You see it here on my YouTube or in the playlist Trading Quotes. I'll upload this here in just a minute. I'll get the entire book for free. And just while you're here, check out all my great stuff. Check out the Trading Encyclopedia, 3-minute videos every day.
Hello.
Teaching you professional technical analysis. Sorry about that. Teaching you, candlestick theory, Japanese, candlestick theory, classical charting. I got hundreds of videos in here teaching you all sorts of crazy stuff. Every pattern you've ever thought of. My Trading Wisdom book, I put that in here as well. Oscillators, trading concepts, techniques. So I'm just super proud of that. So I hope you take some time to enjoy that. Bitcoin Live, where I'm a founding analyst. Catch me twice a week. I do my full market report every Wednesday and Sunday night. I haven't missed that in 8 years. And I am on Twitter at Big Cheds. Folks, thank you for spending some of your precious time here with me. Thank you for hanging out with me. And I hope you are all doing well. All right, I'm going to finish up, of course, with a little bit of Dancing the Church of Eight Wheels. And I will talk to you folks soon. If you're watching this today, it's Tuesday. I'm going to do a live stream on Friday, so maybe I'll see you there as well. So, folks, thank you, and I'll talk to you soon. Big Cheds out.